Yes, I think, okay. I think we could start that Zoom webinar. So I would say welcome everybody to this first independent Sabana independent unit holder webinar hosted by Quarz Capital and Black Crane Capital together. And together with you, all the hopefully all the Sabana independent unit holders. So welcome. So let me start this, actually the presentation. I think you should be all able to see the presentation. You're going to be all on mute because otherwise, well, we like to hear your comments. Obviously, it's going to be a bit difficult, but you'll be able to actually ask questions in the chat box as well. So I would say I introduced the hosts. It's obviously Peter Cannon, the head of Black Crane Capital, who has been a partner in this investment in Sabana REIT and also in the campaign now. Then obviously Havaji from Quarz Capital and myself. And I would say we have provided an agenda for today. We try to keep that as short and as easy as possible. As you all know, we've put out a lot of sort of commentary, letters, presentations, EGM requisitions out. We've sent you a lot of emails as well. We've set up safesabanaREIT.com. So anybody that has not yet visited that website, you can find all the material and most of the commentary actually there as well. And obviously we thank you all for subscribing there. We've received hundreds literally of messages and people who subscribed, who have signed the letter to MAS, who have sent us private messages, and also who have called us. So I think it's very good to have an independent exchange of unit holders, and we welcome it. So today we will discuss first again why we vote against that proposed merger. We'll go through the main points again. While the presentation will go a bit into detail, we try to keep that quite high level because it's really discussed, I think, already at quite a length. Then we would want to talk about, which is most important, the way forward after the vote. We understand there's a lot of independent unit holders that sort of are maybe a bit unsure. What is the way forward? What happens when I vote against that scheme that is proposed? And we want to sort of show you clearly what are our ideas, you know, what should be or what could be a potential way forward, to give you all the confidence, or to share our confidence with you on an alternative way, and to show you there is alternative ways to actually go forward in such a scenario too. And then lastly, obviously, we'll have the Q&A again. To remind yourself, you can sort of use the Q&A button there in the Zoom tab to just type in your questions. So those questions can be answered then by us. So anybody that wants to type any insults there, that they will not be published. So don't waste your time there. You know, obviously want to welcome also everybody from ESR or from Sabana management side, or from the investment bank side. I think is quite okay. It's quite fair game actually to be open. So you're all welcome as well to share your thoughts. And you know, I think it's important to make this as easy and as accessible to everybody. We are transparent, and we also welcome, you know, counter views. You know, that's what it's about. It's just, you know, coming up with counter views as well, discuss those, and hopefully at the end find solutions that are acceptable to everybody and to all of us. And again, in the Q&A chat box, or you can even raise your hand. I'm not sure how that works. We can see if we have some voices there. We also want to welcome, obviously, some voices from the press that have covered that topic extensively. Also, Professor Mak, that has written a lot on the corporate governance. Just a disclaimer, you know, we did not call those people. They are on their own merits analyzing that. They are completely independent from from us, and they have just analyzed that topic between ESR REIT and Sabana REIT, and they have commented on it. And we obviously welcome as much input as possible, and also public discussion. We think it's helpful for the whole market. It's obviously helpful as well for this situation here with Sabana. Again, if anything is not going to be answered here, please just write an email or go to our website. We will try to address your concerns then individually. I think that will be much easier. So I would say, let's just dive in to the first points. I think that presentation is available also on our website in the open letters tab. You can access it there as well. And I think it's important that we don't need to go through all the details of that slide and through every number, so don't be confused. I think that that presentation is also out there for a while. Is also interesting that actually the Sabana Manager came up with a very long and sort of detailed rebuttal of our presentation, which I think is fair, which is good. So we welcome obviously the work they have done there. Obviously that they're trying to question or to put in question our presentation, which is fair. I mean, they seem to have put in quite a lot of work to actually do that. So from our side, it's great to see that they finally start actually to put some efforts there. So we would actually welcome that instead of just analyzing our PPT and putting ours into it, if they put probably the same diligence and work into managing the REIT properly and raising DPU, then we would be maybe all a bit more happy by now and the price would be higher. So, but on a side note, you can obviously also read that. We were not going to explain every other rationale, just on a side note or to make it quite clear. We take all the information we get, in the public domain on the portfolio. Obviously, we're not inside the manager. We're just outside shareholders, such as every other unit holder that has 100 units in the REIT. And we would just try and try to analyze it and try to come up with ideas of how much can that REIT actually be worth, or how much DPU can they afford. And I think that's quite basic and normal. And as in doing that, we will obviously make some assumptions, and we will try to come up truthfully, and we put all our effort into that. But I think it's a bit, I think that's fair game that we do that, right? And it's our right to do that. And obviously somebody else can question our assumptions. But for that reason, I think it would be a bit lengthy and not necessary to now, rebuff the rebuttal from the manager. So if we zoom out a bit and we ask ourselves, why did we vote for the merger? You have to understand, we came out with a letter already last year. We're portfolio managers. We are fundamental investors. We look for undervalued assets. And if we like assets like that, we invest into those companies. And we came out last year already with a proposal. We thought, okay, it's quite interesting that a manager should be able to manage two REITs, two industrial REITs, sort of with the same mandate, and at the same time exhibit the necessary independence. We saw that that's not possible. We sent out our letter. We said, okay, they would have to merge. They have to reorganize that. And then obviously coming into that year, when that finally happened, we looked at that merger proposal and we were quite a bit sort of, as probably the other people too, we read through that, we do a diligent analysis, and we try to come up and say, okay, does that make sense? Usually, again, if there's a great offer and we're happy with it, that will be a great day. But if it's not, then we just try to find out, how do people come up with such a proposal? In this case, we just felt that proposed merger offer from ESR REIT for Sabana is just an unprecedented and a substantial discount to the net asset value on all metrics. It doesn't matter if you look at the June 20 NAV or the December 19 NAV. We thought, okay, you know, even if you look at COVID, we all know it has been a tough year for everyone and for many industries. But looking at such a steep discount, we just ask ourselves, how can the independent directors, also the IFA, how can they sort of come up with such a low offer and actually propose this to be fair and also reasonable to us. So that was the first point. We just said, okay, that's a very high discount, a bit of an absurd discount, that we said that have we missed something? We looked at other mergers. We looked at other unit for unit mergers that were actually transacted usually at book value or even above book value. And then we thought, okay, that's just a low ball. So that was basically, as you all know, our first reaction. If we go a bit further, we felt, yeah, let's look at the terms. Let's look at the exchange ratio. We felt this is actually quite sort of a DPU De-creative in that sense, in our view, in our analysis, value destructive. I mean, again, that is our analysis. If anybody else has another one, you can come out with your analysis, but we felt it is quite DPU De-creative. Yeah. And we had also looked, if we have a merger on the table, the first thing we do, we're very simple, you know, we look at the merger and then we ask ourselves, okay, if you propose a marriage, yeah, that marriage should be sort of beneficial, sort of for both sort of sides. And then before we go inside a marriage, we ask, okay, what happens if we don't do it? If we are on a standalone basis? We did that analysis. We looked for 2021 and we had came up with a DPU forecast at about 3 cents. We said it's about an 8% over 8.5% yield. We're quite happy with that. We went a bit further, look at all the redevelopment potential, etc. Went through that, said, good, we can come up with actually up to 3.5, 3.6 cents of DPU if that REIT, Sabana REIT, stays independent, yeah, gets managed to the full potential, yeah, and to the full efficiency, yeah, and that was our analysis, yeah. And lastly, we also went in and said, okay, wait a minute, okay, and we have a discussion in the office. We talk through it. Okay, ESR came and they actually purchased their shares at like 48 cents. And then these are just a lot of points where you ask yourself, okay, if somebody comes to me and says, okay, I bought for 48 cents and now I offer you 37.5, give or take, etc. We just felt, okay, on whatever metric we put out there, and yes, our assumptions might be different than other people's, but on our own assumptions, yeah, we felt it is a bit funny. And of course, we had a whole discussion, probably the ESR people and the Sabana Manager, and they would come in and say, oh, this is a merger. This is not an asset sale, you know, which is a good point, but is a funny point because technically, you know, you have an exchange ratio, and even if that is a merger and not an asset sale, you know, we as substantial Sabana unit holders, we would actually exchange our shares for a certain amount of ESR REIT shares, and we would lock in that undervaluation forever. Yeah. So you know, a lot of those arguments were just basically, in our view, not very, you know, they were not flying very well, sort of with us. And after a long discussion, we just felt, okay, that is not really flying. So first is a lowball offer. Secondly is just DPU De-creative, and we felt standalone. We could happily have Sabana REIT go on, you know, see all the new projects, redevelopments come online into 2021, yeah, and thereafter. and probably be quite a happy shareholder. And of course, that's a difference, you know, if you have shareholders that say, oh, it's such a bad situation, I just want to be out. We're not like that. We have a long, you know, a long-term view, yeah, and we're very happy to stay on. And as such, we need to understand if we feel confident about that. Maybe Harvard, you want to add
if
something?
I may, if I actually might add a little bit of things on this part. So it's also extremely interesting in some of Sabana's management rebuttal this few days that, so basically what they have actually flagged out is the retail component. So finally, after removing the whole thing from the joint announcement, they finally put it in and admitted that there was this retail component at 151 Lorong Chuan, which will actually be completed in probably just 2 to 3 months time, you know, given that we are already in late November, almost December already. And then they also rebutted that, oh, look, financing cost has been lowered from 3.8% to actually 3.2%. And the third thing they said was also that occupancy rate has been increased from 77% to 80%. So our question to them basically is that, why did they just focus on the first half numbers when they make the recommendation for the merger? So they come up with a lot of excuse like, oh, look, this is very technical, we can just focus on the first half. But don't they know that in 2021, which is where we are going into now, all these levers, basically occupancy rate, financing costs, and retail component, will basically raise DPU. And given the increase in DPU in 2021, so can they still come and tell us that this is actually yield accretive, or actually this is actually yield not decretive? And basically, if you are a Sabana unit holders, in 2021, you will actually get less DPU in the merged entity than in the standalone entity. And in a merged entity, you also have the issues of higher leverage and also shorter land lease as well. Yeah, that's all. Yeah.
Sure. Okay, good points. So going forward, obviously, we also looked at the 4 key assets and what is the potential, obviously, to increase the GFA. We came up with a number here. You see that is actually quite high. So we're quite confident in the portfolio. Obviously, again, we're not inside that portfolio. We don't have access, but you can believe us, you know, every other weekend we actually walk there from the outside, and we try to, you know, understand, you know, is somebody shifting out? What is happening there? How easy is it to shift the chemical hub outside? You know, we just do what a responsible unit holder would do. You know, if you tell us, oh, that's all, you know, that's our view, and you should just trust us, and you should just follow us and merge us, that's fine. But still, we do our homework, we walk there, we look outside, you know, what's happening there. And so we were just quite surprised that there's so much potential, you know, to increase the GFA in those 4, obviously, key assets. And we came up, you know, with a redevelopment plan where we think these key assets can potentially increase the rental income by more than 10 million. And for us, it's just very funny, you know, we are unit holders. Why do we have to come up, okay, with a presentation day after day, week after week, with a letter every time to explain to the manager that gets paid, okay, to do that, to explain to them how they should make more than $10 million more in gross rental income? I mean, that's not my job. That's your job to do that. I mean, that's just ridiculous. And then you attack me on our presentation that everything is wrong. You know, it's actually not really relevant if that is like 1,000 square feet more or less, okay? Or if I take this a different rate than you take. I mean, by nature, I will come up with different assumptions because I'm a unit holder, okay? I'm not a manager. I don't have access to all the data that you have. I'm not an insider. I'm a unit holder. I stand outside and I independently, with my team and with my partners, assess what you put out. And if I don't like it, yeah, I take the right, yeah, by putting our capital there, such as every other unit holder that has 100 shares, they put their hard-earned money there, and they have the right to question, you know, what the manager puts in front of them. And that's called a public market. It's just normal. If you don't like it, that's fair, okay? But we came up with those calculations, and we are just not sure, why do we have to do that? Again, this goes through the whole topic, through all of our presentations. We are at a stage, and pardon me getting excited about that a little bit, but it's just not understandable for me that we have to go through the whole topic and explain to them and show them, you know, we are actually the ones that have to show how you increase the value, how can you increase DPU, how can you make, how can you have more GFA? I mean, that's, again, that's not our job. Normally it's the manager that should actually come up with such a PPT. It's the manager to tell, actually, it's up to the manager to tell their unit holders what they should actually, what they will actually do to greatly increase and to grow the REIT. I have never met personally neither an asset manager or a REIT manager that is coming out publicly with reasons and with statements and with justifications for why they're not growing and why they cannot grow. Because come on, it's funny, because the only reason you're an asset manager is to grow. The only reason to be a REIT manager is to grow the REIT and to use the capital and the assets of the underlying REIT to its fullest potential. That's the only job of a REIT manager. So pardon my French, but if somebody comes up and sends you lengthy explanations why they are not growing, why they're not increasing their potential GFA, and while they're not using their leverage, yeah, then for me it's just not understandable. So something is just a bit, in my view, a bit funny. So that's just an additional point. We just took these four sort of assets to as an example again, and maybe Harvard, you can say something on the leverage leverage level. That
Sure.
can be an additional point.
Sure. So basically, when we were evaluating the leverage as together with some bankers as well, so you know, I think this the REIT managers claims that basically it cannot increase its leverage level again is again an absurd claim. So I mean, we've actually put a lot of the details down here to you already. So you know, Sabana, I think there are a lot of unit holders which are also Sabana unit holders in the 2016 and 2017. So you know, this the interesting thing is, despite all the issues with the then Sabana Manager, you know, I mean, we all know what happened, so I wouldn't go much into it. Leverage level was actually much higher. So basically, the portfolio could support higher leverage level. And the amount of unencumbered assets was actually much higher as well. And they could also even increase leverage level then. But the funny thing is, come 2018 and 2019, where ESR, which is trying to sell you that they're great managers, take over. So the interesting thing is, it's the same portfolio basically. Leverage level has actually come down significantly. It's the same portfolio, but now they say that, look, you know, yeah, we don't have a leverage level now. We can't. And the interesting thing is, if you look at ARA logos and Soilbuild, so this are also REITs with primarily Singapore assets. I think ARA logos I mean, both has actually ventured into Australia already. You can see that both REITs are just slightly bigger than Sabana, but however, they have higher leverage level, and they can also they have higher leverage level, and they also have a lesser amount of unencumbered assets, and they can also increase leverage level. So we ask this to unit holders: what do you think is the issue? Is it because of an incompetent manager which has failed to work for us and has failed to increase the and has failed to do the financing properly, or is it the problem with the portfolio? If it is the problem with the portfolio, why in 2016 and why 2017, when it is essentially the same portfolio, can the leverage level be higher, and can the unencumbered assets be lower? Yeah.
Mm-hmm. good point. Okay, let's move on. We have seen that there's a lot of questions there, obviously in the Q&A box, and I think the
Yeah,
main purpose.
I've been busily typing answers, so.
Okay. So we want to go to those questions as quickly as possible, because we know obviously this is the most pressing point. I mean, we went through that, but I think all of you have the presentation in front of you. You can look it up later. Another topic was obviously the ESR portfolio. We said, the bride that is made to be so beautiful might not be as beautiful as everybody thinks. That's fair enough. You can go through that, I would say. And then another slide where we just look at Sabana and ESR being combined, the worst performing REITs, coincidentally. So maybe the quality of the management is really much more important in the end than actually pure size. We do believe that Sabana independently as well has an opportunity to grow in the future, and as such those size concerns, they're just not valid. So a manager should not say, oh, we are so small, we have to sell. The manager should say, look, I have some proposals how we can grow our portfolio. Okay, that should be the normal point of view, and that's usually what I hear when I go to a roadshow or anything. That's what managers are usually concerned about in that topic. Of course, let's be honest. I mean, there's some corporate governance, potential corporate governance and potential conflict of interest questions in that topic too. We have seen a lot of articles which were very interesting and helpful to read. For example, from Ben Paul, and then also from Professor Mak, which independently actually commented on that and have their own views on it. We don't want to touch on that. It's not up to us in general to decide, on the potential independence of board members. That is the job of the board itself, right? And we just feel there's a history with Sabana REIT. There has been a lot written about it. Everybody should make their own picture. We will see what happens on that front potentially, but that was just sort of an additional sort of point where we felt like, yeah, we're a bit confused, that merger proposal gets so highly applauded by all these independent directors, and we felt, okay, that a deeper analysis would potentially be necessary. There you can see again all the articles. Feel free to browse that yourself later. So again, let's go into the way forward. So we have clearly said we vote against this merger because we're not happy, okay, with how this has been going. We're not happy with the performance of the manager so far. I think that's fair game. That's right. That's our right to do that. Somebody invests in our fund and they're unhappy about our performance, you just fire us. It's just normal, okay? It's nothing personal. It's normal business conduct. Yeah, we think the current management, they have not provided us and every other unit holder with a stringent and with a clear path forward, except applauding to this subpar merger and except telling people, oh, just vote yes, just take it, you'll be part in a bigger REIT and everything is going to be fine. We don't think that is a thorough and detailed analysis. And why they are cautioning unit holders to take the statements of Quarz and Black Crane Capital, lightly, or to question those. We think, okay, it's fair to do that, but it's also fair to question the statements of the manager. And as such, we have said what could be the way forward. If that merger was to be voted down by all unit holders, by the independent unit holders, it's quite clear. We have said, we came out with a letter that we think there should be a fresh and independent manager. Just to clarify, we're not planning to buy the manager, the existing manager. We think that would be quite a poor investment for us to do that. We would set up a fresh manager, or technically, the technicalities will have to be cleared. It would be potentially the trustee who would have to do that and not ourselves. And that manager should be internalized later on. So it would be owned by all Sabana unit holders and for all Sabana unit holders, including ESR, obviously, but everybody else too. There's precedent of that. NetLink Trust is ranked #1 in the governance index for trusts. I think that shows you there has been a lot of commentary. In general, there's potential corporate governance conflicts that can arise from the current REIT and REIT manager model. NetLink has shown that that can be highly sort of beneficial to all unit holders. We calculate again on our own assumptions that we could increase, we could see a DPU increase by about 7.5%, technically by eliminating those fees that are currently paid to the ESR people. And
I think this part, maybe I can interject, because
yeah,
they actually have
sure.
they have actually tried to ask, like, where did we get this $7.5 billion from? So this 7.5% is actually about 2 million. So basically, this is basically of Sabana REIT Manager's financials. So just want to say that in the year end April 2019, Sabana REIT Manager basically made about above $2 million of operating profit. So basically, they collect about 4.5 million of fees, and then they pay for all the operating costs of hiring the manager, the compliance, and the CFO. And what is left, which is basically the operating profit, is actually 2 million. So this is actually where the figures that we got it from.
Okay. I think the important point is here that we believe that such an alternative manager, an internalized manager, is doable. Obviously, the merger has to be voted down first. After that, we would come up with another EGM requisition. We would propose that. Obviously, incumbents feel that that's a silly proposition, and there is no way that could ever be voted in. We actually oppose that view. We think there's actually a highly likely, or we're quite confident that this can be actually done, and that this is a straight way forward to create an independent and internalized manager. So I would say I think we're not scared to bring that up. This has already been brought up before. Yeah, Sabana, obviously, as you all know, there's a lot of shareholders that have been basically in that boat or on the ride since a long time. Yeah, so they remember the old times already, and they're all organized in forums and in chat groups, and they discuss that obviously heavily. But I think this time the difference is that we combined all together would have quite a sort of important voice to actually vote not only down that merger, but also vote in, basically bring a requisition to replace the manager. And I mean, it's clear that the incumbent manager would not like that, but I think that they have had a lot of time, now to actually manage Sabana REIT to the fullest and efficiently and to the fullest satisfaction of their unit holders, because that is, again, to make it clear, their sole purpose, okay, and their only job, okay, to manage that REIT properly. So unit holders are happy, and they haven't done that, in our opinion, yeah, and that's why we feel it's high time to come up with a different proposal. And by voting against the merger, technically you open up the opportunity or the possibility for everyone together to bring in their own independent manager, which is in the interest we feel of all unit holders. Again, after that, what happens next? I mean, just to make that very clear, because that's a frequent point that I just find a bit funny. And to make it clear, just as every other unit holder, we are also shareholders, okay? We invest into the REIT to participate in the success of the REIT, yeah? It's quite clear, yeah? But that everybody else is doing that. And now, after that, we're not looking to actually steal the manager or to benefit from the management fees. No, we have clearly stated a fresh manager will be owned by all unit holders. Yeah, it's not our intention to have a manager or anything. We're not REIT managers. Yeah, we're fund managers. Yeah, we leave that job happily to highly qualified real estate professionals that maximize the efficiency of the portfolio. After the vote, yeah, if an independent internalized manager would come to be, yeah, we will have a 5-point plan, which you can see here. We would immediately start on executing on the plan, which the current management has, in our view, failed to do so far. We want to increase the dividend yield, obviously, the DPU. There are certain cost savings through the internalization, obviously, of the REIT manager. The 151 Lorong Chuan completion, obviously, and the retail component coming online will obviously lift up the DPU. We will try again to lower the finance costs, and we would try, obviously, to have the new manager buy, obviously, yield accretive assets in the future to actually really efficiently manage Sabana REITs assets over the mid to long term. And we feel this 5-point plan is not something that is like unreasonable or anything. That's just a plan that we came up as independent unit holders, that we feel that should be actually the job of the manager to do that. I think now it would be important to go quickly into the Q&A. You have all commented here.
Can I just make a comment about the?
Sure.
I've been watching some of the Q&A, and I think one of the issues that I guess people have some concern with is if they vote down the merger, what's next, and can we be successful at getting an internalized manager, or what other options are there, right? So I guess it's and this is a fear thing that Sabana, the existing Sabana manager, has tried to amplify and play up to scare people into voting for the merger, because it's the only deal, and if you don't, this REIT's too small. I think there's some pretty simple answers to that. The first one, if this merger is voted down, it's clearly a vote of no confidence in the existing manager. The existing manager is under close attention and scrutiny from the SGX and the MAS, and needs to be very, very careful with how it manages these assets on the go-forward basis. And we would plan to pressure them to change in the board immediately. And that would be one of our first steps in parallel with the internalisation plan. So even if the internalisation plan didn't succeed because of the vote, for instance, we still think that ESR would be, or that the Sabana board would be under a lot of pressure to rejuvenate itself and bring in new blood to work things forward to maximise value. Secondly, there already is improvement under the surface, and you can see that in the third quarter operating results, where utilisation of the properties is already improving. They've said that last half, the average debt cost was 3.8. It's come down to 3.2. That's going to work its way through the P&L. Even using Donald's numbers of, I think it was $2.1 million Harvard of income from the retail component at 151, you factor that in. Already, we're looking at a far improved DPU for the second half, which we think would show that their deal is break even at best and probably dilutive. And we just are absolutely astounded as to how, given property's a pretty easy business to forecast, and Donald's the man of excuses. I've never seen so many excuses come out of anybody's mouth in all my life. So how they can not, well, he plays the COVID excuse, but how can they not possibly give a forward view as to the DPU effects of this deal on unit holders? And they've just completely dodged it. And we think this is DPU damaging to unit holders. So if it gets voted down, what happens? Your DPU goes up. You've still got your 51 cents of NAV. You've got the potential for a much more independent manager, and at best, a completely independent manager that you get to vote on. We see very, very little downside to voting this down. You can already see there's two share prices started to dislocate a little bit, might give you a feel for whether it might trade in the short term, but we plan to stay active and stay in with this. We're not in this to vote it down and then walk away. We have big shareholdings, we can't easily sell them. We're here for the long run to create value and get a proper outcome. And our target is we want NAV. That's what we want, and we're going to get it one way or another.
And I think one more thing as well, just to assure unit holders as well, this internalization plan is not one that we have taken lightly. We have actually have two legal teams working at this plan. They've done the organization, they've looked at what is required for the regulatory approval. We also discussed this with a number of institutional investors, the banks as well. And the answer, and you know, is very, very interesting, because the way that the Sabana REIT manager writes it is all about this trigger of control clauses. So they kind of imply that basically the banks will trigger these clauses because basically an underperforming manager is removed. So we'd like to assure unit holders that this is not the case. The banks back their loans. I mean, basically the loans that the banks give are actually backed by, first, the cash flow of the Sabana portfolio, second, the Sabana portfolio as well. So, you know, I mean, for them to say that basically they are actually the one determining the bank loan, so that's actually an extremely laughable thing. And the second thing, which you know they like to threaten, is basically that so yeah, you know, but we can still try to threaten and scaremonger. So to be honest, basically ESR and its affiliates are the biggest shareholder in Sabana REIT. I mean, if I put it in a very, very negative way, so they are the biggest shareholder in Sabana REIT. So basically, you know, if they want to blow up the whole REIT, in the worst case, who do you think suffers the most? So ESR Cayman is basically a listed vehicle as well. So and it also has public shareholders as well, which some of them includes the biggest pension funds and the biggest institutional investors in the world. So basically, the thing that we would like to ask them is that, so basically, are they trying to tell their investors that after being voted down for this really ridiculous merger, then they get voted out by the independent shareholders and lose 40 million in, or potentially 40 million in the manager. So they, and the third thing they want to do is basically they want to destroy more than 90 million of dollars they've invested in Sabana REIT by trying to scare the unit holders. So who do you think is the biggest losers if this whole internalization thing and the change of control interest thing doesn't go well? So, you know, I mean, but you know, before this, we've also already put in a lot of safeguards to make sure that this does not happen. So how should we do this? Shall we go through the questions one by one? Yeah.
I think, Harvard, you already marked a few of the most pressing questions that they can be answered maybe live.
Yes,
Maybe you can just go through the most pressing of them, because that's quite a few already answered, I think. But
yes,
I think it would be important to go through
the answers too, yeah.
To go through the most important questions quickly.
So I think the first question is, do you think a change of REIT manager will improve the poor occupancy rates of Sabana? To be honest, what we view the situation is this, okay, so Sabana REIT has actually gone through a really tough adjustment period where you have a lot of the master leases expiring, resulting in increasing vacancy rate. And of course, we have the underperforming manager in the last 2 years as well. So what we actually see for Sabana, and this is also the reason why we got invested into it in the first place, both Peter and as well both BlackRock and Quarz Capital, is that we think we are actually at the light of the, or basically we're actually at the end of the tunnel. So going forward, what you can already see is that they are actually, and these levers are actually being executed already. So firstly, you have this retail component at 151 Lorong Chuan. And then right after that, right after the retail component is completed and you get this extra cash flow and the uplift in book value, The next thing that can be done is basically the redevelopment projects at 151 Lorong Chuan as well, where you can build 200,000 square feet of space, you know, at $3 per square feet. So it generates a lot of income, and this space can be rented to master tenants. You know, it can be custom built, and this generates another good stream of income again, and increase in DPU. And the next thing is basically the decreasing the financing cost, and also increasing the occupancy rate. I think Peter has pointed out that, you know, in just the last 3 months alone, you can see the sharp fall in the financing cost, as well as the increase in occupancy rate. So we think we're at the end of the tunnel, and, you know, all Sabana's property are, you know, plugged into these structural growth sectors: industrial, logistic, tech parks. You know, technically, you know, this is leveraged onto the e-commerce space, and we think there will be a lot of demand for this. So we're actually confident, and that's why we are committed long-term investors. And we think that basically the quality, it's not really the quality of the REIT portfolio, but it's rather the manager, which is resulting in a poor performance. Yeah. And the second question is, how is the DPU going to go up if debt increases in 33, 35? You know, I mean, this is again a very, very funny question that the manager comes up with again. So, you know, we have 45 REITs in Singapore, and a lot of them have done development projects: AIMS, Kappa, Capital Commercial. So what usually is done is that when you take a big asset down for development, what you can do is basically you can distribute capital, basically to smooth out this loss in income. And why do you do that? Because you know that basically this is just for this temporary period of 1.5 years where the asset is out for development. And after that, basically you might actually even get a jump in DPU as well. So this is what a lot of managers of REITs have done. So I'm again puzzled at why Donna can't figure this out, because, you know, sometimes you don't need to reinvent the wheel. Just look at what other people are doing and just do it. That's all we ask, to be very honest. Yeah. Okay, yeah. So you guys can take the next 2 questions.
I'll speak about there's a question about one of the biggest fear-mongering things that the manager this time and in 2017 talked about was the triggers in the loan agreements, and as to if there was a removal of manager, that it would trigger the default on the loan. Yeah, that would only be a problem if you had a manager who, you know, was of such a low character that they chose to effectively burn down the house before you got to take the keys, right? So you know, those agreements, those triggers in those agreements are very standard clauses. However, as long as the manager coming in is a sensible manager of, you know, properly qualified and regulated, the banks are not going to have an issue. It's a complete furphy. It's a complete misleading, fear-mongering thing for them to be throwing out there. Properly organised, it's not an issue at all.
I think there's an interesting question here. So we say that the share price of Sabana REITs is being pressed down at 3536, dumping of thousands of units and things, and it frightens Sabana shareholders. And basically, why don't you guys, basically us and Quarz and Black Crane, accumulate more shares to V2 the merger? So I think, as you guys have actually realized, there's only a few parties who's interested to keep Sabana's share price low at this current juncture, and to make the gap as high as possible, such that, you know, it attracts some unit holders to convert. So the first thing we would like to highlight is that this gap is basically artificial. So the problem that you face is that, first, okay, so let's say that, okay, so you're attracted by this 3-4%, so you decided to vote yes. But what if ESR share price falls down probably in a few days' time, so once the vote closes on the 1st or on the 4th? And then basically when it falls down, so basically you have actually locked in yourself at that price already. So let's say if ESR were to hypothetically fall back to 36 cents, that means you will be converting your Sabana shares basically at 0.94% of 36 cents, basically 33 cents and so forth. And I think instead of just making this hypothetical, let's look at what happened in July when they did this announcement of this proposed merger. The price went from 36 cents, ESR price went from 36 cents to 40 cents when they announced the merger. And then subsequently, in a few days' time, it immediately collapsed down to 36 cents. So at that time, it's still okay because you guys were holding onto your Sabana shares. But if you were to vote yes for the merger, this will be locked in already. So basically, your fate will be dependent on ESR share price. And we've already told you the issue with ESR's portfolio, the short land lease. So, you know, the short land lease is actually a very, very interesting thing. The only question I would like to ask you, why on earth would anybody go and buy a property like 750 Chai Chi, which has only a land lease of 10 years? Would you buy a property with a land lease of 10 years? I wouldn't buy a property of a land lease of 10 years. So basically, we really urge or caution unit holders to think carefully. Once you vote yes and you lock yourself in, you are at the mercy of ESR share price. And if and you can see that, and it's just these few days that ESR share price is at 40 cents. We don't know what happened right after the day that the merger closed. Yeah. Not the merger closed, the vote closes. Yeah.
Maybe Avad, you want to answer as well this question, you know, implementation of internal manager. Again, you know, that loan default clause. Or Peter,
Yes.
maybe I think that's really pressing for a lot of people, I think, that are undecided.
Yes, I think the key thing appears to be that if it's the fear of getting stuck, which is that they vote this down and then there's not another transaction and it sort of drifts, if you like. But with committed shareholders like us, we can avoid that scenario. And ultimately, you know, we have spoken to people about buying all of the assets in the portfolio. There is interest out there. Bidders don't like to walk into hostile situations, potentially upsetting competitors. So when this is voted down, the manager has to start with a clean sheet of paper and look at all options. It's quite clear to us that since 2017, they had a short period of looking, the manager had a short period of looking for potential solutions. They were hamstrung because Vibrant was the manager at the time. Vibrant wanted a high price for their management company. So again, conflicts of interest. So this vehicle has suffered right from when it was born with conflicts of interest with its manager, first Vibrant and now ESR. So there's never been a position where the manager of this REIT has been able to go out to the broader market and say, where is the interest for these assets? And who might we merge with when they haven't had a conflict with a management company that has divergent interests from the unit holders. And so when this is voted down, that will then be able to be done. And given, yes, it's not the A grade portfolio, but it's a very good portfolio. It's a very large portfolio. It's in a market, being Singapore, where there is strong appetite for assets and it's hard to get assets. Industrial property is at a very attractive class at the moment because it seemed to be protected from, actually benefit from COVID with extending supply chains, etc. So we think, you know, this is don't give up. This is an attractive investment proposition for a lot of people, is what we've said publicly. And all we now need to do is to get a decent, half decent manager, and you know, we well suspect this manager might be able to operate the assets properly, but it's been the big picture, how they've negotiated this merger, how they've failed to refinance the portfolio property, they've held on to Shari'ah compliance too long, et cetera, et cetera. So we don't see, you know, we think doing this deal locks in the downside, and we think there's only you know, the upside from here.
And I mean, there's one part I would like to give kudos to the Sabana and the ESR REIT managers. So basically, the part that I would really like to, you know, congratulate them on is basically that they've chosen to basically do the merger at a time where basically the kind of Singapore is on a lockdown. So we have talked to a lot of buyers that are interested in purchasing a property portfolio in Singapore. And basically the merger is basically, and they keep telling you that, oh yeah, but there's no buyer and there's this is the only offer on the table. The reason why there's only one offer on the table is basically that any buyers from overseas needs to come and do due diligence on the property. And basically, I mean, we're all Singaporeans, so what we have during the last few months is basically, anybody that comes here needs a reason to come here, firstly, and secondly, they will need to be quarantined for 14 days as well. So this is basically one of the biggest impediment to anybody from coming in. But I think, as investors, we need to look into the future. And what the future tells us is that, once this COVID situation starts to subside in the first quarter and the second quarter, you still have extremely low, still have a very extremely low interest rate environment. Sabana's portfolio, which is in Singapore, will basically be in high demand. You have this extremely high yielding, attractive portfolio at a very low interest rate environment. Hey, I'm happy to basically, wait there and then basically, see a bidding war potentially happening. And, and I think this is also another thing why we think that the internal manager is actually extremely important, because with the internal manager, one of the things that we will do is basically to conduct a fair and transparent bidding process. We will allow all bidders to be able to, we'll open the books to all interested bidders. Everybody can look through the properties. And basically, and this is how we can undertake a sale of the majority or the whole REIT at basically, near or above book value. And
what else do we have here?
The question about the share price and about supporting the share price, etc.
Well, if there's some
51 cents,
if
it wasn't Christmas.
If there's somebody dumping, who do you think are the guys buying? So I wouldn't go more than that. Yeah. And I think maybe to also clarify, as well about the internal manager setup. So I think there's a bit of what do you call that? Unclearness about this internal manager. I think one of the easiest example you can look at is basically NetLink Trust. So basically NetLink Trust is an internal manager setup where basically the management team is basically owned by the trust itself. And, as you can, I think, we are all investors in the Singapore trust and REIT market. You can see how well it has performed and also how well it has ranked in the trust and the corporate governance index. So our goal or our aspirations is to have something along this model.
The other question here is around the implementation of the change of manager. I think there's also some fear around, well, do we end up rudderless for a period of time? And again, we would hope that the existing manager is mature and grown up about this and will provide a sensible transition. And so the key for us is first changing the board. If you start at the top, start with the board who are strongly independent, properly independent people. They don't necessarily need to be property experts per se, though it helps, but they need good corporate governance, investment management, fund management type of expertise. Start with them. They can then use the existing management team even as a transition team, or we hire a team ready to come in. But in either event, they review the management, assess the management, and change if necessary. So that would be our approach: is to start at the top.
And I think there's one part about what is the cost DPU impact of internalizing the manager. So I think as Jan and Peter have said, that we are basically not buying the manager from ESR, so it doesn't matter how much they paid for the manager. We're not buying it, we're setting it up from the ground up, or basically the trustee is setting it up from the ground up. And the cost of it will be minimal. I mean, compared to the fees of about 4.5 billion you pay a year, I mean, it's going to be around or even slightly lesser than the basically the ballpark. And I mean, there's also very, very laughable when one of the questions to us was that, oh, look, it takes $1 million to put up the base capital. So I mean, we wanted to say, look, we pay you 5 million. The REIT pays you 5 million a year, pays the current REIT manager. The REIT can afford 1 million as the base capital of the company. And the DPU impact of internalizing the manager will be positive, like as we have mentioned. Basically, all the profit which the manager currently makes will basically be directed back to the unit holders. So this is where you get this immediate 7.5% increase in DPU. So technically, the interesting thing is once all of us vote against this merger and it succeeds, the slogan we will tell you when we organize the internalization manager vote is, do you want to vote for more money in your pocket, or do you want to vote for less money in your pocket?
The other thing I think it's worth mentioning, there's a little bit of talk around some questions around, is it realistic to expect ESR to pay an AV for Sabana? And on a share for share basis, yes, perhaps that doesn't work because of ESR unit holders' concerns, which just tells you that this is not the right time to try and execute this merger. So the priority for Sabana, which is underperforming, is to get its performance right, get its share price back to NAV, then all strategic options open up for the company. And I think the other point I'd make there is that the existing manager has made lots of excuses as to why they've been unable to do that. Quite naturally, they now say that that's impossible, and therefore that's why you should accept this merger. We totally disagree with that. We see scale as being important, but it's not the most important thing. The underlying performance of the assets is the most important thing. And we think by improving underlying performance of the assets, we can close share price to NAV. Then scale is upside, but it should be pursued secondly for the reasons, which is exactly getting that order the wrong way round is why we're here today with a poor merger proposal on the table. I think that's largely, I think that's largely.
I mean, there's a few more, but it's all like a lot of the questions, they're actually, obviously around the same topics. Yeah.
And I think people should feel free to, if we haven't covered their question, put it in an email to us.
Yeah.
We're more than happy to.
I think we had here a good input also from Professor Mak here, the comment that actually the internalized the internal manager that would be not only for Sabana REIT, that would be a good point, but also for other REITs as well, and that Australian REITs have already moved a bit faster towards that model, toward the stable structure. So that's a well-received point as well to keep in mind. And obviously there's other examples of an internalization of the manager. There's more questions here, I think they all revolve.
Yeah, I think this question we ask, if the current external management is conflicted, why the big REITs like A-REIT and Mapletree are performing so well? So actually the thing that we would like to highlight is that actually Sabana has a much more unique situation than all the other REITs. So basically what we have is basically a kind of the same company, which basically owns controlling shares in both REIT managers, and both REIT managers operates in the same industry, and both of all their assets are all majorities, or actually all their assets are all in Singapore industrial space. And this creates a lot of issues potentially. So issues such as so now we have a really good property to purchase. So basically, who buys the property? Who has the right of first refusal? So does ESR REIT buys it first? Because some people have more shareholding in ESR and they will benefit more if ESR buy it. And the thing is, why should Sabana unit holders be made to suffer if such a decision is made? So basically, this is the big issue that we basically currently face. That's why in this situation, this is really different. That's why we really believe that the internal manager is basically the route to basically create value for the REIT.
Okay. What else? Anything else you see you would like to answer here? I think there's a lot more. There's a lot more questions.
I think there's one question here that with an internalized manager, there is no fees being paid externally. Then getting the manager to act in the right way is all around, you know, management benefit incentivization, so the right salary packages and bonus packages.
Okay, what else? Yeah.
I'm sorry, guys, because if you guys think that this is a bit weird, because, you know, unlike some other webinars which are organized by an organization with the first alphabet of S, you know, which is just all easy questions. What we are doing basically now is that we're trying to answer all questions, however hard it comes, because we also want to give transparency to all unit holders as well.
Actually, there's a question here, Howard, I should answer, just saying what does an internal manager really mean? What an internal manager really means is that the REIT becomes just like an ordinary company. So the people that manage the assets are employed by the company. And so their salaries and expenses become an expense of the company or of the trust. So in this case, because the properties are held by a trust and there has to be another and the employees have to be employed by a company, you have the trust owning the management company. So therefore there is no profit, or any profit generated by the management company goes into the trust. So in effect, it's just a cost basis. So therefore there is no fees paid. There might be fees paid to a property manager, as in a Jones Lang or someone like that, but not to the fund manager. But there's no fund management role where there's an external fee paid. So all the costs of running the REIT are internal. Then the REIT structure simply becomes it's a tax and distribution structure in effect. And this is how REITs are operated in a lot of other markets. So in the UK, a REIT is just a company and has a particular tax status. In Australia, it's like Singapore, but they have this internal structure where the manager and the trust both trade together and is a stapled security on the stock exchange. So that's what we mean by an internal manager. So under that scheme, there is no ESR would lose their economic interest in the manager. We would not get that economic interest. The unit holders, other than our pro rata share as unit holders, the unit holders would get the benefit of that economic interest that is currently being extracted from the trust. So you can see why ESR would fight such a proposition.
Sure, what else? Let's go further. Yeah,
and there's one question that Sabana Manager has admitted that they are unable to grow and hence were like to merge with ESR. If this is the case, is there any regulation to reduce management fee for underperforming? Well, we will remove them. Yeah, we will try to remove them. So I hope we answer. Yeah, we will remove them because of the underperformance. Yeah, we'll try to remove them.
Okay. I mean, that's you want to comment, Harvard, on the Shari'ah status and a new independent manager? I think that's maybe a bit of a difficult one.
Yes. Okay, so the issue is, we have actually really tracked the history of Sabana REIT as well, and I think we have also talked to a lot of unit holders as well, and we understand the concern that a lot of unit holders actually hold or own units in Sabana REIT because of the Shari'ah compliance purposes. And basically what ESR has basically said is that once the merger goes through, it intends to remove this whole Shari'ah compliance immediately, which means that a lot of all this, a lot of the Sabana unit holders are basically forced to sell. So this topic we've actually discussed a lot with our bankers. So and the answer that we have basically obtained is that we will basically, or the internal manager will basically try to reduce, and and what a lot of bankers will tell us that technically, you know, having Shari'ah compliance financing and the normal financing should not actually be much of a difference, but it is. I mean, so basically, you know, there's a reason why Sabana's financing cost is actually that high, and it's actually not through Shari'ah financing. It's actually through some people not working hard enough to make sure that they seek a competitive rate of financing. So this question will be thoroughly explored, and definitely, you know, definitely. So if we are able to seek similar or actually just slightly highest financing charges, but still keep Shari'ah compliance, we understand that if this is what a number of unit holders want, then this is definitely something we will all have to consider together. That, you know, basically when you do something, there must be a lot of purpose to do it. Otherwise, there's no need to do it. So basically, the main issue is that we will try to get financing costs as low as possible, even with Shari'ah compliance. Yeah.
A lot of questions.
Okay, so there's a question here about DPU engineering. Okay, so maybe, I guess this comes to a bit of corporate finance. So it's distributions that drive the share price. That's quite clear if you look at the trading of Sabana and other REITs, right? So REITs tend to trade on distribution and income, not necessarily on their NAV. That's why NAV premiums and discounts occur. Most REITs do some DPU engineering. So most REITs pay a proportion of their management fee in shares, for instance, and then distribute that as a distribution, right? Now, Sabana doesn't do that because they have felt in the past that because there was a discount to NAV, that they would dilute their NAV per share by doing that. Right? However, it has also been partly responsible for them trading at a discount. Because like for like, when you look at Sabana's share price, other than a period where Vibrant was trying to inject assets at very high prices and doing some not so good things, other than that period of time, the share price, basically the yield of Sabana REIT was not dislocated from other yields of other REITs. So if market practice is to do an element of DPU engineering, then it probably makes sense to do that. But you know, it needs to be balanced and measured.
I think there's this question about what do you understand in the difference between merger and sale of assets. I think this part we have basically covered it already. So basically what the Sabana Manager continues to argue is a unit, that this is a unit for unit sale, and it's not a, you know, it's not a sale. That's why the book value is not important. So that part we have already shown why is it absurd, because all the other unit for unit mergers are done at or above book value. So we don't see why this should be basically different. And we also want unit holders to actually understand that basically once you pursue this merger, basically you are, an analogy is basically you are merging your good assets into a portfolio of assets that you don't really know, or basically the Sabana Manager has not really tried to tell us what is this, and is this basically what you want to go into? Basically, you have hold this portfolio of assets really well, you know what is it, and now you want to go into a bigger entity where you basically inherit all the problems which are inside this bigger entity as well. And all the good things that we're talking about the Sabana portfolio, basically it will all be diluted and you will all be shared with the bigger entity, while the biggest entity's short land lease and high leverage ratio will basically be shared with you. So is that the exchange that you actually want to have here?
There's one other question here. I think it's sort of been answered, but it's why didn't we fight for a better share swap ratio?
Share swap ratio, yeah. Just saw that as well.
Yeah. Look, I think Yeah, as I said earlier, we see benefits to scale. We do think a combination of smaller industrial REITs into a larger one makes sense, but it has to be on the right terms. So if we're to eat 26% of NAV, there's a huge amount of scale benefits you've got to have to overcome that, a huge amount of growth to overcome that. And I think it's the other important fact is that, this is not a 50-50 merger. When we do this merger, Sabana Unitholders will effectively hold about 23% of MergeCo. So it's pretty small. And that's where the statements made from the existing manager that this is not an asset sale is actually incorrect. Economically, I would argue it's 77% of an asset sale. And the share swap ratio, yes, we still get some share in 151 retail upside, but it's 23%. It's not 100%, it's not even 50%. So that's a big, a bit of a big misconception here. So merger's great, but it's got to be on the right terms. And when you're a vastly smaller merger party, it's even more important.
And on that issue as well, I mean, to be honest, I mean, you saw that and somebody mentioned it here in the comments as well, actually, the Hibiki and Kodia Golf Trust example, where the offer was afterwards basically raised. Yeah. And then afterwards, everybody voted for the sale, right? So, I mean, technically, if you ask here, why didn't you go for better share swap ratio? I mean, technically, before we even came out or shortly after we came out, that offer has already been made final, technically. So, normally we just feel like, okay, you can discuss that all long and wide, but if immediately somebody comes out and just says, look, just take it or leave it, and there will be no discussion possible anyways. So, I mean, that was not our doing. So I think that was made quite clear by ESR REIT and the parties involved that they made it final and that's it. So there's not much wiggle. Yeah. There's not much wiggle room then for independent unit holders. So there was from the beginning clear that there will never be any discussions and that nobody has an interest in those discussions. I mean, that I think that was more the issue, and there's a lot of examples there that show that in other cases that worked out quite well. So I think that's also a bit of on a side note. Yeah.
Look, and I think whether they made a tactical error, not coming to talk to us, or whether they felt that given where they were with ESR and the economics for ESR, that it was this deal, this was the best deal they could put forward, and give it a go and see what happens. They've certainly wasted a lot of people's time and a lot of money.
Yeah.
I mean, just to give a really, really simple anecdotal example. So basically, this issue is akin that basically that you own a portfolio of assets and you decided that, hey, let me hire a kind of a property manager, or let me hire a manager to manage these properties. And then basically what happened is that the manager that you hire to manage the properties, instead of suggesting of how to do things better, he kept telling you, no, I can't do this. I can't decrease financing costs. I can't increase occupancy rate. I can do, and then the REIT manager said, but you know what? I can sell your portfolio at 26% discount to my boss. Yeah. Oh yes, my boss owns another property portfolio, but we're totally independent. Yeah, he just happened to own this portfolio, and he's willing to buy your portfolio for 26%. Sell, you must sell. And if you see all the communications material that Sabana Manager has come out. So basically they're just saying, look, we don't know what to do anymore. Just sell your portfolio at 26% to the other guy whom we share the same boss, but yeah, we're all independent, So this is basically the takeaway that we want to give you. And what we want to tell you is that you have a choice. So basically, we have already done our research, we've done our work, we are very, very prepared to go down this path. We are fully committed to the REIT. And what we will do is basically, after we vote against, we have already laid out a very, very clear path forward to basically create value and improve the share price of the REIT.
Yeah.
There's another question here, Jan, which is an interesting one. It's someone sort of confused about this asset sale versus a merger, okay? And saying, but if we do a merger, don't we still own the assets? So the reality is today you own 100, if you own a Sabana share, you own 100% interest of the Sabana assets. Post this deal, you will own 23% interest in the Sabana assets, or your shareholdings will represent 23% of the Sabana assets and 77% of the ESR assets. And so if the Sabana assets go up in value, you'll and the ESR assets don't move at all, you'll be 77% worse off. So you only get 23% of the upside. Now, if the ESR assets go up equally, then it doesn't matter. But we know there is a lot more upside short run or even medium run in our assets because they're undermanaged than in the ESR assets.
And the ESR assets of short land lease and high leverage portfolio all become your problem as well.
Yeah, so let's assume exactly. So, and just the fact that you're receiving shares as consideration. The key difference then, what's the key difference? The key difference is if you sell for assets for cash now, you are receiving cash and you no longer have an interest in Singapore industrial property. If you do this deal, you are at least retaining an interest in Singapore industrial property. But you are crystallizing the discount by virtue of the merger ratio.
I think there's another good question here that came in just now. When is the last time Sabana appointed an independent advisor to conduct a sale process on the whole portfolio, and what was the outcome? Given the attraction of the portfolio and the industrial focus in a key market in Asia, I am surprised parties have not come forward since ESR's lowball proposal was submitted. Internalization of the manager is a no-brainer in this scenario. I applaud your work. Okay, great. Great comment. I mean, to be honest, you know, that's what we feel also, what we're surprised about. I mean, you know, if Sabana management is so like of the opinion that portfolio is so catastrophic as we're made to believe in all their proposals, and that the only, you know, they stressed several times, oh, this is the only offer on the table. Yeah, well, I mean, you didn't invite anybody to give actually, you know, run an independent show. There's also another question that asks us here, what we think about the actual liquidation of the portfolio. I mean, look, I think it's very simple. If you make up your mind, what would you do? Okay, you make up your mind, you're going to sell your condo. Okay, you sell to your neighbor. That lets you believe it's just super bad, just sell it to me, it's more easy, 30% discount. Or you give it to the broker, and the broker, by nature, will sell it to the highest bidder because they will get a fee of it. So that's the normal way how you would do it if you actually choose to sell your own portfolio. Then they can come up and say, oh, you're simplifying it. This is not an apartment, this is an industrial portfolio. Yes, that's true. But you know, there's actually a lot of people who are interested in such a portfolio, and I think, you know, out of obvious reasons, we're not going to disclose the discussions we're having, you know, out of confidentiality. But let's see, you know, once that merger is voted down, you know, I mean, we know that possibly for a period of time there will be no follow-on, no possibility for any follow-on offer whatsoever from the same bidders, technically, or no new proposals for quite a while. So let's see what happens. Let's see the excuse if people knock on the door of the manager to actually conduct a DD. What will he say? Will he say, oh yeah, of course, you're welcome. Let's do DD and let's wait for your offer. Let's see where the offer comes in. I mean, this is just a normal way of business where a manager that is interested in maximizing assets, which normally every manager is actually, would just go that route, you know, to invite independent parties. I mean, have you looked outside the window? interest rates on the whole planet are virtually at zero. There's like 20 trillion of government debt trading below zero at negative rates. I can tell you very honestly, there's a lot of people who think that an industrial portfolio with that sort of yield and DPU upside is actually a brilliant investment. So it's not very hard. It's not me saying that. It's just market knowledge, okay? And it's just hard to understand why they're not doing it. So thanks for that comment as well. We believe that would have been the way forward. If a manager is incapable or unwilling to manage a REIT, just put it up for sale. Let people vote on it and sell it to the highest bidder. That would have been the proper process.
I think let's have a. I think we have run this for almost 1.5 hours already. Maybe the last 5 minutes, if it.
And then maybe there's another one that asks obviously about the parties. You know, how many parties we are speaking to, or I don't know if this is if it's the investment banker asking here, or Donald is asking that, or somebody else. I mean, a nice try there. I mean, we appreciate it. I mean, also, by the way, next time maybe invite us to your fire chat, you know, without sending our bank details, you know, so then we would also happily listen to your webinar and also contribute and ask a lot of questions for you to answer. I think for unit holders, it's just clear to see what is the difference. You know, we are open to all your questions. We put out our proposal. Other people are not so open. They would just have questions that are pre-vetted and pre-analyzed and pre-answered, and we're not doing that. But obviously, we can also not disclose the parties we're talking to. We won't do that. We will do that at the appropriate point in time. Yeah, it's quite clear, you know, if there was to be an internal manager, you know, this will not be us, you know, behind that. Also, people are asking, yeah, will you be on the board? Will you do this? Will you do that? I think the first point is to express to the current manager and to the acquiring or the merging party, yeah, that we do not agree to the proposal in its current terms, and therefore we voted down. Yeah, and if that is voted down, okay, you can trust in us, okay, while we are shareholders, exactly like all other unit holders, that will do whatever it takes, yeah, to come out as quickly, as transparently, and as good as possible with next steps. You've seen we're very, very transparent. We send you emails to everybody who subscribes and who is interested. Yeah, and we're very happy to talk to anybody who has a valid and sort of fair and transparent questions to us, and who is also willing to actually show their name there instead of writing anonymous questions. I mean, you know, next time just sign in with your names, you know, then we can also see who is asking the questions. But on a side note, I think we're confident to do that, and we will disclose the parties at the appropriate time and not before anything would happen to another guy. Says, who are the bankers you have spoken with? Please understand, you know, at the appropriate time, we could then also disclose that, because it's also then in the interest. And I think it would be now a bit too early to do that. I think that's quite clear. We've put out our intentions. We've tried to do as an easy and comprehensive analysis of the situation as we can. Okay, and I think afterwards we will come out with another round of what's next. And just to be clear, you know, there's a number of highly qualified candidates in Singapore for such roles. Okay, Singapore has a huge talent pool of people, and we are highly confident that we can find the appropriate personnel if there were to be an internalized manager. Okay, I mean, look, I think we have just I think we have tried to answer actually most of the questions. Peter or Harvard, are there any more points, final points, Peter and or Harvard, that you both would like to add to the unit holders?
Vote against. Vote for the long term. Yeah.
Yes, I would say don't listen to the scaremongering. You know, have confidence in the assets, and have confidence in, you know, the corporate governance rules and protections in Singapore, that we can win this, and it's entirely within your rights to expect to have a manager that properly runs your REIT, properly represents your interests, and that we should all fight for that. And that's a worthy cause, as well as getting to NAV, which is what our target is.
Yeah, there's some funny comments here again, just to see that, you know.
About will we stand by our assumptions?
Yeah, I mean that some people are asked that our information would be factually
we will stand
wrong.
by our assumptions if you disclose all the information to unit holders, such that every one of us can make a fair judgment on whether this. Don't hide information from us, and then try to just point us to one direction. You know,
yeah.
I mean, the only thing I want to say is that, I mean, I understand for a lot of unit holders, there's this COVID situation, and then everybody's feeling a little bit jittery. But I just want to say that, look, you know, the worst is behind us, really. I can understand, you know, in June, you know, you make a low ball offer because things were very, very unclear. But now, you know, we are really getting out of the tunnel already. So by first quarter, second quarter this year, next year, everything will be, you know, the COVID situation would be mostly resolved. We have the vaccines, we have good therapeutics, we have good testings, and interest rate will basically remain low. There will basically be a hunt for
the search for yield. The search for yield is going to be enormous.
For you, yes. So, you know, we're confident. That's why we're so comfortable holding our position, because we know that, you know, we just sit on it, and we know that next year this asset will be worth much more. So this is actually the reason why we I mean, the only thing we have to say is that we're confident. We have looked through Sabana's portfolio on a very, very thorough basis. We are very confident of the upside. We are very confident of what we can do to increase the DPU and also to increase the share price.
Yeah. And look, and their assumptions are assumptions. Some of them will be right, some of them will be wrong. But even if they're half wrong, there's still a lot more upside from being a standalone REIT than doing this deal.
Okay. Yeah, I think we exceeded actually our planned time. I mean, I think it's time to.
I think it's time to wrap it up.
To wrap it probably up. I mean, again, anybody has some more comments.
We haven't answered anybody's question. Please email either of us and we'll answer
email everything. Send it to us. And again, I mean, we look really forward to a conflict-free and re-energized Sabana REIT. And we believe that's there's a pretty good prospects actually to increase the unit price and also the DPU for everybody. And obviously we thank you all for taking your time in the evening to dial in and actually to listen. I mean, obviously would have liked to have a more live exchange and also with hearing your personal statements, but it's just in this format. I think this was the best we could do. I mean, again, we had this polling, so it looks actually that you know, the vast majority have actually said they intend to vote against the scheme meeting, just for your info here. And they all think it's actually a pretty good option to internalize the future REIT manager. Also, the people by far think it's an unfair and not reasonable offer. So just for the completeness to give you those answers in the from the poll.
Yeah, okay. The last thing is sign up on our website. And then we will provide you with all the information that you need. You know, after this merger, there's still a very interesting, you know, that's where the fun starts, and that's where we really try to increase our unit price and the DPU.
Yeah, I think that's where the work starts after the vote. So yeah, we hope we could actually solve a few of your people who are undecided or who were still undecided. I think the voting is still going on. We have instructions. We still get a few emails from people who are not sure how to vote. Please go on the website sabanareit.com and get info there. And in the absolute case where you're not sure, you can always contact us.
Send us an email or just write to a WhatsApp to us.
Yeah. Okay. Thanks, everybody. Thanks, Peter. Thanks, Harvard. Thanks, everybody, for joining. Wish you a good evening and a good rest of the week. And everybody stay healthy, stay safe, and vote no.
Thank you very much,
Thanks,
guys.
everybody.
Thanks.
Thanks.
See you again.
Yeah. Bye-bye.
Bye.
Bye.
Mm.